The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 25th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Love to hear from you at 877-927-6648. Now, if you've got a question but you can't call in, we've got your back. You can send me an email. Send that off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a slightly mixed bag out there. The mix is really only coming from the semis, which are up 43 points. Otherwise, all the other U.S. indices trading the downside. All the sectors inside the S&P 500 trading the downside. Dow's down 633 points, 1.6%, 1.25% for the S&P or 65, 1.5% for the Nasdaq 100, 271, 1 and 4/10 for the Russell. That's a 28-point move. Treasuries are down 23 points. You've got gold that is trading up $8. Silver's up 3 pennies. Light sweet crude is off 45 cents. Natural gas is off 2 pennies. The 30-year Treasury printed out at 113.09. Our leaders in the clubhouse, and I do mean leader, up nearly $102, nearly 4%, 3.5% really, for Chipotle Mexican Grill. Broadcom is up $27 or 2%. Tyler Technologies 6.5% or $27. United Rental $23, 3.5%. Nvidia is up $21. That's a 2 7/10% move to the upside. O'Reilly Automotive is the leader in the clubhouse to the downside, off 7%, followed by Meta down $61 or 12%. Decker's Outdoor $46 or 5%. ServiceNow $43, nearly 6%. Reliance is off $30, nearly 10%. So we got movers, but we definitely have some shakers. In fact, let's just start with that first shaker, so to speak, and take a look at what's going on with regard to Meta. So we take a look at Facebook, Meta, out here. We can see a couple different things. Number one, on a weekly basis, prices trading into a potential support level. That potential support level is simply a trend line. It's a trend line coming off the low from the week of October 23rd in 2023. You just match that up with the week of December 4th. Of 2023, that pretty much runs into the low of January 1st of 2024, and you can see right now, so far that area is held. It also has support at the bottom of its weekly profile, which is at the 438.12 level. Now you got nice volume certainly coming out of this thing. You can see on the A to B equals CD side, it's made the 1 to 1.618. It has not made its way all the way back to the gap. The question would be, where's the gap start? Does the gap start on the candle where price had gapped up from, meaning February 1st, or does it really just need to get down to fill that gap, the high of January 30th? That's where it really needs to go in order to close the gap in price that's out there, and that high out there is at 406.36. Is price going to get down there? I don't know the answer to that question. Is this a buying point out here inside of Meta? We'd have to go take a look at some of the short-term signals and see if there's anything out there. And so, oh, shoot, I had that up, and then it went away. Darn it, Stevie. So we're going to do that. I'm getting those charts fired up. Now, let's just go see if there's anything going on an intraday basis. So we'll change windows. Of course, it's going to take just a moment here for this to populate. That's okay. It will be worth the wait. Now, I don't know what that means, but it does mean we're going to go take a look at some short-term time frame charts and see if there's anything else that we can see out here when we take a look at Facebook. So let's take a look at its 30-minute time frame chart up here. It's not really the one that I wanted. Let me grab a different one out here. And sorry about that. Let's pull this over. So we've got the 130-minute time frame chart right now. The oscillator and change line is probably at 30 minutes, so we're not going to worry about that. Is there any kind of a bottom signal? Well, it turns out that this is going to be wave number 7. That is letter G. So we just take a very small portion of the Chapman wave out there. We'll see on a 130-minute time frame, this formed a top at 1140. That 1140 top was back on April the 8th out there. And now we can see there's also an A to B equals CD pattern to the downside. But that really started the wave count. And you can see that we are at wave number 6, that is, at 1140. And that was at April 22nd. And today, we've now gotten down to wave number 7. Now, the way that bottom would be confirmed is a higher low. Now it's a higher low on a 130-minute time frame chart, likely to take place. Of course, 1140 is the time frame that this candle here will go ahead and complete. Let's just go up one more level. The other level would be 195 minutes. There's 295-minute bars in a trading day. I don't see anything there. I see wave number 6 out there. Let's size it down to a 65-minute chart and see what we have out here for Facebook. On the 65-minute chart, all we've got is an A to B equals CD pattern to the downside, so nothing there. And finally, let's finish this off by taking a look at a 30-minute time frame chart. And here on the 30-minute time frame chart, I don't have anything either. So hard to say. I pay attention to the 130-minute chart. That's the only one with a potential bottom signal. That is letter G out there. So I would study that. But ideally, especially with the volume, price will get down and actually close that gap, which was really a TD9 count top back on January 30th. And again, that high is at 406.36 out there. So that's what's going on. We take a look at Facebook. We haven't even talked about what's going on inside the equity markets or the equity future contracts. So let's go take a look at those. Let's pull up the daily time frame. What do we know is going on here? Number one, inside the ES Mini, we can see it's got a buy the D point pattern. That buy the D point pattern formed with this bull sash candle a few days ago. That was on April 22nd. We had a 3-day rally. You remember, now in this is where it gets a little bit difficult, because in bear markets, you're going to see rallies that last from 2 to 4 bars out there. So we're inside that range. I would say that if price were to close below that buy the D point pattern, that would really answer that question out there as to whether or not we're in a protracted kind of further pullback that can go on for several more weeks at least. It could go on longer than that. But the key level right now is just simply to be watching throughout the day is the bottom of that profile. That's at 50.22. And as long as that holds, support holds, well, then we'd have to look at those intraday charts for some types of signals. In the case of the NQ never made it past that red oscillator and change line yesterday, nor did the ES Mini out there, but it has support at 17,252. If price closes below that, then we're likely headed back to its swing point from April 19th and perhaps beyond that. If we take a look at the Dow Equity Future contract, the Dow still has its TD9 count bottom. Even if it closes below the TD9 count bottom, that would be the session from April 15th, and that low out there is 37,911. Price has to really close below 37,651 to generate a more bearish signal out there. And finally, we take a look at the Russell 2000, still has a TD9 count bottom, with price consolidating with inside its daily profile. The point I'll make at 11:14 in the morning is no levels of key support on a daily time frame have failed. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So in that first segment, we identified at the end, we were taking a look at the equity future contracts. As I said, there's no key levels of support that have broken, but there are key levels of support that have been tested. And that main test came from the ES Mini. So that's the chart we're going to take a look at next. We get down to a support level on a daily time frame. We look to the intraday charts to see if there's any kind of bottoming signals. And if there are, then we go pay attention to resistance areas. So now we take a look at a daily time frame. You can see again, that's the upper left-hand side, price getting back to the 50-22 level. As we start scanning forward, when I have a 5-hour chart, I've got a TD9 count bottom that's still in place out here, but I don't have anything else right now. So I don't see a bottom signal on the fresh move overnight. They really started last night when Meta released their earnings out there. If we take a look at the 240-minute time frame chart, same thing. It's bar number 7, but we're not going to worry about that. The 2-hour chart, prices closed below a breakout level of 50.4250. That usually says we had to lower price. The 60-minute time frame chart's got an A to B equals CD pattern. All of these have A to B equals C. Well, I won't say all of them, but certainly the 60-minute time frame chart does. And if we were to get a three-river Morningstar candle formation, then we need to see a price probably about, there you go, 50.37. If price closes above 50.37 on an hourly basis, that would be 12 noon. Then you'd have a buy the D point pattern for the 60-minute time frame. That would join the 30-minute time frame, which has a TD9 count bottom. Since we don't know whether the 60-minute will form a bottom signal or not, we just pay attention to the 30-minute. Now, the 30-minute, the area that we're going to pay attention to is about 50.46 to 50.51. If price were to take out and close above 50.51, you could see a rally up to the 50.80 level. Otherwise, we just have a bit of energy that's being worked off, and we could easily head lower. So price has got to take out resistance. On the 15-minute time frame chart, it just completed at 11:15 a Rhodes momentum indicator bottom signal. It formed that bullish engulfing handle. Its first level of resistance is at 50.46. So that 50.46, the top of its profile, going along with the 30-minute oscillator and change line area, that becomes a stiff level of resistance. Again, if you close above it, 50.51 would be the area to be watching. I don't see anything additional inside the 10-minute chart, which does have a Rhodes momentum indicator bottom pattern out there with a consolidation with inside its profile. So from a parameter standpoint, you're watching today's low so far. Price closing below that indicates at least the intraday bottom signals that we're taking a look at out here. And today's low so far is at 50, 22, 25. Again, tying right in, really, to the tick, quite frankly, with the bottom of that daily profile. I mean, how does that work? But it's like electricity. Stevie uses it all the time without knowing how it really works out there. So let's go take a look at the only request that we have in the request line right now. Would love more. So give us a call at 877-927-6648 or email me, steve@tfnn.com. And, of course, inside the Tiger's Den, we'll take any and every ping. But Dan inside the Tiger's Den wanted to take a look at short-term time frame charts for Tesla. That's not it. That's not what he was asking for, but we will come back to that set of charts out there. But let's go take a look at the short-term time frame charts for Tesla. So the shortest time frame that I've got out here, not that we can't do shorter, which I will go down to a 5-minute here in a few moments. If we take a look at what's going on here inside of Tesla, we're interested in today's activity. You had a TD9 count bottom on a 15-minute time frame, Dan. TD9 count top, I should say. And that top, the high of that top was 166.38. And the very next bar closed right above it. It closed at 166.51. That pattern's been negated out here. But you still have resistance. It's this swing point out here from 10:15 in the morning back yesterday. And the price can close above 167.97. I say Tesla heads higher out there. But you've got a negated 15-minute signal as we speak right now. Of course, watch the profiles. You need to see price remain above the profile from that short-term time frame, 166.02, to suggest that it really does want to move higher out there. If we take a look at the 30-minute time frame, the 30-minute time frame is in the process right now of forming a TD9 count top. That says that you will get a TD9 count top that confirms at 11:30, less than 8 minutes from now, and it will complete at 12 noon out there. So this time frame, the 30-minute time frame, is suggesting that we would see a retracement. Now that retracement may only take us to its oscillator and change line. That's currently at 163.96. If price were to get below that level, then price would enter its buy zone. And the buy zone is between 158.57 and 160.92. That was a 30-minute time frame chart. What's the next short-term time frame chart that I have? I've got a 65-minute chart out there. We take a look at it. What do I see? I don't see a darn thing that we're going to hang our hat on as we speak right now. So it's right now the 15 and the 30-minute time frame. There's nothing on the 130 that I see out here. I mean, I do see a bottom pattern, the TD9 count, and bottom patterns on the 195 and bottom patterns on the daily, and price remains above the top of its profile out there. So this would be day number 2 above the top of its profile. It's signaling to you and I that this is a profile change in trend. However, and I do mean, however, if we look at that weekly time frame chart, which I'll simply open, what we can see is that Tesla has been below the oscillator and change line since January the 5th. So what we know, Dan, is if we were to, so that's first, that's key resistance. So on any rallies, you've got to watch that 171 and change level, currently at 171.50. If price were to close above that level, then we would likely see a rally into the 192 area. So that's Tesla. On the short, I said I would do a 5-minute chart. I like to do what I say I'm going to do. Has always been one of Stevie's signatures. And as we take a look at the 5-minute time frame chart out here, what do we have? Not much. I don't have any kind of a topping pattern that we've got out here for that time frame. So Dan, I hope that helped you out with regard to Tesla for its multiple time frames. And as always, thanks so much for playing around with, hey, let's give Stevie a request out there. All right, so let me just check the emails, and you're most welcome. Check the email, see if there's anything that has come in. There is one. There's one that wants to take a look at XPEV out here. So let's go back and take a look at that chart. Let's do that on this set of charts out here. So let's go put an XPEV, and this is for GTE by email. Did I put in the right thing? Yeah, I did. Okay, so that's great. So see if there's any other requests. No other requests that have come in so far. I need your help, debtors or listeners or everybody. I always need help out there. All right, but Stevie will figure out something to do without any requests. When we take a look at XPEV, what do we see out here on the daily time frame? We see a fairly stretched pattern out here. I don't see a bottom pattern or signal. Prices, got back inside its profile for one day, and then yesterday back below it. I would say on a down move, what we're looking at is 688 or so as being your next level of support. We take a look at the weekly time frame chart. It's just simply god-awful out there. A weekly time frame chart says stay away. I don't see any kind of, let me just pull this back a bit further. I don't see any kind of a bottom signal out here. The only potential bottom signal is that price going to move down to its all-time low out here. That takes you back into November 4th of 2022. And that low out there is down at 660. I had the wrong candle. That low out there is at 618. Are we already below that? No, we're not. 618. So it does look like the Stevie 618 is wide open in game out there with regard to XPEV. So I hope that helps you out. Peter, let's see. John wants to take a look at silver futures, gold futures. Okay, thank you. Thank you, Dennis, for helping me out there. So for the silver, let's do this, Hi-Ho Silver. Let's go back and go to Stevie's day trading charts out there. And I'll start pulling these charts up for us while we are at break. So we're going to come back. We're going to take a look at silver futures and the SLV. We're going to take a look at the New York Stock Exchange, its advanced client oscillator for Peter, CVS for no spin, and the gold contract for RR. Right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So I've got the chart for silver up on our screen now. This is a rolling over into the July contract. So I'm going to show the July contract from here on out. And really, the May contract isn't showing anything significantly different out here. So here's the first thing to take a look at with regard. I want to give you the longer-term picture. The longer-term picture is silver looks bullish when we take a look at profiles. And the reason is that we have a new weekly profile that is forming this week. It began on Sunday evening. It is still in place out there. It is likely to stay in place. Of course, I won't have that confirmation until this Sunday evening, but let's go with the data that we have. What you will see here is, first of all, the current profile on a weekly basis. The daily did the same thing. It formed above the prior profiles. So that's signaling to us from a profile standpoint that silver remains in a bullish mode, both for its daily and its weekly time frame. And I point that out to you because silver has been below the bottom of its daily profile at 27.72 for what now looks like maybe its fourth consecutive session out there. But what price has found support, not oddly enough, where it should have found support is in the buy zone. Now, it's at the very top of the buy zone. We take a look at that weekly time frame chart, and that at 27.50. Not that price can't slip below that, but you can see over the last 4 trading sessions just how strong of support level that was. Well, turns out that if, in fact, price closes below that area, we'd be looking at a move back to 26.83. But I will say that silver looks, from a long-term standpoint, looks very bullish at this point in time. Now, let's move from this chart and go over to the white background charts and see what kind of signals we're getting from those out there. And the reason why I went to the black background chart is because I've got the shorter-term time frames. I didn't have the weekly up there, and I would be remiss if I didn't share with you that very, very important piece of information out here. So now we're on the white background charts. We don't need to spend any time with the daily out here. On a 5-hour basis, we take a look at silver. You just have a consolidation with inside its profile. Bullish in structure. 27.19 is key support. 28.03 is resistance. 28.01 is resistance on the 240-minute time frame chart. The 120-minute chart seems to have really locked up price over the last many hours out here with support at 27.39 and resistance up at, there's a new profile that just formed. So let me give you the new profile. It's got support at 27.39, resistance up at 27.82. 60-minute consolidation in profiles. 30-minute time frame chart, not really providing us with a ton of information out here. The 15-minute had a Rhodes momentum indicator bottom, took price break back to breakout support, which held out there. So I'm not getting a great feel for anything other than a sideways consolidation when I take a look at the intraday charts out here, John. But again, longer term, silver looks, for the reasons that we shared, that we took a look at on the other background screen chart out there, remains, and I would have to say, very bullish out there. Let's go take a look at the SLV, see if there's any other kind of signals out here for John. In the case of the SLV, it doesn't offer the same message that the July contract for silver shows, does it? Look at the weekly chart out there. That shows that we're trading above profile with a TD9 count top out here, and that, in fact, we should head lower towards the 23.76, 23.89 area. On a daily time frame, what do we have? What do we have? We've got a sell the D point pattern out there. What price is simply consolidating with inside its profile. Key support there is 24.01. Resists up at 25.74. But I'd still be taking all my P's and Q's from what the silver future contract is doing versus take a look at the SLV. So John C., I hope that provided you with the information that you were looking for, and maybe even a bit of a tidbit more than that. And as always, thanks so much for your request. Peter would like to take a look at the New York Stock Exchange Advanced Decline Oscillator. So we're going to go take a look at that, and which did close above its zero threshold level for 2 consecutive days. But today's been a complete failure, and we're back below it. So we had a first close above it on the trading day of April 23rd, and then yesterday we closed above it again. That was a signal that sellers were the ones that were trying to take control of the market. Well, they may have tried, but they have failed, at least at this point in time. Now, if price gets above that level, a whole different story. But this tells us that really buyers were never in control of the general markets. Or we're just in such a choppy roller coaster time frame right now that maybe, Peter, this isn't really the level for us to hang our hats on, and that is the advanced decline oscillator. That is a difference between the 19 and 39 period exponential moving average of the advanced decline line. No Spin would like to take a look at CVS out here. So let's go switch back to those white background screens, see if we can find anything to assist with whatever No Spin might be looking at out here. So momentarily we'll be at the CVS charts. And we take a look at CVS, what do we know? Well, it still is in wave number 7 to the downside, so that's going to extend itself today. That could be a bottom, but that needs a higher low out there. If you were to get a bullish reversal candle today, you could confirm a Rhodes Momentum Indicator bottom. Short of that, price likely heads lower out there. If we take a look at the weekly time frame, the weekly time frame shows us that price is trading into a swing point that takes us back to November 3rd of 2023. That swing point had volume of 51 million shares. Last week, this did 42 million shares. So far through Thursday at 11:30, we are at 25 million shares. So 25 million going into 51 million shares. CVS is pulling back with light volume. Now, what if this was pulling back with volume? What I could share with you is likely price would go tag that swing point low, but it's on lighter volume, and I can't really make that statement. It certainly is a potential outcome while price is in there, and that low being 64.41. The monthly time frame chart for CVS looks pretty much awful. It's trading below its bullish structured monthly profile out there, so I don't see a whole lot of good when I take a look at CVS. Let me pull this back a little further on the daily. See what else I can find out here. Not much more than that. So no spin. Just for blanks and giggles, let's go take a look at the seasonal time frame out here. Let's go see if CVS even pops up. So give this a moment. It'll try to find it, see if it's got the data, and voila, it does. Now, as far as years worth of data for CVS, we've got 44 years. So let's put this on. And CVS typically, let me detrend this just a tad, just give us a closer view. So really, it's in still a favorable seasonal time frame. We can see January, February, March, April, and May are seasonal time frames. And then the rest of the year, at least through October, kind of gets so-so out there. So obviously, price with regard to CVS, it is not even coming close to following its seasonal pattern. So let's just chuck that off to the side out there. And that's all I've got for you. No spin with regard to CVS. Now, I don't recall if this was a question or not, but it was from Jimmy D. He was talking about Roku out there, and I guess they're coming out with earnings. And the question was, I think the inference is, will this pop on earnings out there? So when we take a look at the daily time frame chart, what do we know? We know that there's an A to B equals CD pattern to the downside. The B point being the TD9 count bottom that held for a few days out there, and that was a low from April the 9th. So let's go ahead and draw that pattern in. Let's draw in the A to B line. So I'll do that while we're at the breakout here. When we come back, we'll finish taking. This is NVIDIA. Okay. Sorry about that. When we come back to the break, Stevie will actually have the correct symbol on my screen, and we're going to go take a look at Roku. Steve Rhodes with TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We finally got the right ticker symbol up on our screen, and that is a ticker symbol for Roku. I believe they're coming out with earnings after the bell this evening, and the question is, should this pop? Well, what Roku did on a daily time frame, this was back on Tuesday, Wednesday, on Monday, it formed a nice Rhodes Momentum Indicator bottom, and price got right back inside that bullish structured profile, and then 2 days ago, it closed right above that. Even this morning's retracement and pullback in the market was nothing more than a test and rejection of support. That test rejection of support is at 59.63. We got down to low 59.66. So if you're asking me, should this pop to the upside, I would say yes, but I'm going to offer some caution here in a moment. The question is, do we close above yesterday's close? That's the question. Yesterday's close was 61.83. We're at 61.59. I would argue that it would be more likely that this would rally tomorrow. That would mean, after earnings, if price closes below that at day's end. And the reason that I say that is if it closes above yesterday's close, we will have then this 4th consecutive higher close. Not that that's a bad thing. When we take a look at consecutive closes up or down, it's just simply dance steps or a race or what have you. And we take a look at other periods of time where we've gotten to bar number 4. So first of all, we got to bar number 4 on February the 9th out there, and it did get to a 5th bar before price started pulling back. Then the time before that, we got to bar number 4 on January 23rd. That proved to be a one-hit wonder day, but still it pulled back. We got to bar number 4, the trading day here of November 28th, and then we saw a pullback. We got to bar number 4 of consecutive moves on November 3rd, and then we got a pullback. So from a pattern standpoint, it absolutely is bullish for its daily time frame. And if you do close above yesterday's high, you'll be at bar number 4 out there. And, it doesn't mean it can't move higher out there, but we're just taking a look at its normal patterns. We look at the weekly time frame chart. There's no bottom signal here, but price is back inside its profile. If it were to rally, then the key resistance level that you'll be watching is right around 66.75. That is the top of its weekly profile. The monthly time frame, things look just fine. Price is trading with inside its profile. It is bullish in structure and would suggest that maybe 53.65 would hold the support to the downside out there. Of course, we have that daily Rhodes Momentum Indicator bottom, and a close below 56.16 would negate that signal, and we'd be below, again, then the bottom of the weekly profile, and that would suggest lower price. So does it look like it's definitely trying to turn the corner out there? And I think the question becomes, boy, if it closed above yesterday's high, it's just a little bit suspect out there. So that's what I see, Jimmy. I hope that helped you out. And if not, then my apologies. Inside the Tiger's Den, there was a question from Mr. Z about the NQ. And his question basically is, let's see if I can find it. Question is, Steve, do you see reasons that suggest the NQ will not decline to under 17,113 by Friday out there? 17,113. So, and 17,113, I suppose that's a swing low. Yeah, so that's a swing low from April the 19th out there. So the first reason would be because price is still above support. Support being the bottom of its daily profile. That's at 17,252. So if price were to close below that, then that would signal to you and I that price is at least going to go after that swing point low. So that would be the first area that I would look at. Where's the second area? Well, the second area means I've got to change screens out here. And I think John already knows what it is that I'm going to say or suggest out here. Where else does price have to close below to suggest that it wants to get down to those lows out there? Well, what it has to close below is its apogee pivot point. Now, apogee, which is the point in time when the moon is furthest from Earth, came in over the weekend. I believe it was on Saturday. When it comes in over a weekend, we don't have live trading markets out there. So what we have to do is we have to identify two different spots. And those two different spots are the close as of Friday, which was 17,179, and the open on Sunday evening, which is 17,228.25. So right now, there are two things that are getting in the way from price potentially getting down to that area. Or what I would restate it like this. Price got to close below these key levels out there. And I know you follow this, the apogee and perigee pivot points religiously out there. So those would be the things that could get in the way of the market, or the NQ that is, moving lower out there. Now, what we'd also have to do is go take a look at maybe the top 10 instruments inside the NQ to get a feel for what they're suggesting to us. Beyond that, the only other thing I can take a look at that I can think of would be to go take a look at the equal weighted ETF out here. So why don't we do that and see what kind of signal we're getting from it? And this will take a look at the equal. Where did I put it? Right here. What? Oh no, this is probably the wrong one. I'm hoping not. So this should show the this is the correct one. This will show us the equal weighted ETFs for the Qs, for the Dow, and for the S&P 500. It's just going to take a few moments to populate. The reason why I want to take a look at the equal weighted ETF is just kind of get its signal. So yesterday, what was kind of interesting is yesterday the QQEW closed just above that red oscillator and change line, and that was signaling to us that hey, maybe we're going to get a further rally versus the Qs on the lower left that yesterday rallied right up into that area out there. There's nothing else. So we're back inside the profiles on the daily time frame. So this exercise here proved to be futile, but I still needed to take a look at it out there. So John, that is really all that I've got. I hope that helps you out with regard to that thought process, and thanks for your request out there. Now, there are some requests that have come in by email. So let me get back to the my emails that have come in. Now let's start taking Hector and Patty want to take a look at Newmont Mining. So let's pull up NEM. And the question is, fresh A to B equals CDF projections. Thanks, and on the road listening. Well, thanks for listening on the road. And we'll get this to populate here momentarily. At the same time, what I'm going to do on my other screen, where I can draw in the A to B equals CD and give you exact numbers. So Newmont Mining, boy, it is looking very strong out there. Absolutely. And in fact, on a weekly basis, that's what I'm going to start with first. So give me a moment here. And then Hector and Patty, what I'll do is I'll switch screens so we can actually take a look at that pattern. So let's just do this here. Let's stay with the white background screens and see what its signals are. First, it's negating a TD9 count top as we speak right now. And all it needs is a close above the high of 40.78 out there. It looks like we're going to get that. Now, this does show me that we are in wave number 7. Darn. Get through one thing, and now maybe something else pops up. So that's the daily time frame out there. The weekly time frame, you will go back and take a look at that potential A to B equals CD. So here's the issue. You got wave number 7, and then on the monthly time frame, price is trading into the sell zone. And that sell zone is between 41 and 41.26 and 43.18. So 43.18 is a level that Newmont Mining needs to clear in order to say, okay, these A to B equals CD patterns are now in play out here. So let's go, and then we still have that wave number 7 to contend with out there. Let's go to the black background screen. So on a weekly basis, what we have out here is you've got a swing point from the week of April the 8th. That swing point generated a volume of 79 million shares. Right now we're at 55 and climbing. Yesterday, this did 11 million shares. The day before, about 12 million shares. So from a volume standpoint, if we just add about 20 million shares or so to the 55 million, it's going to be close. It's going to be close whether we get a confirmed A to B equals CD to the upside on a weekly time frame for Newmont Mining. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So we've got a number of requests that have come in. Let me see if I can get to these. We take a look at Microsoft. Microsoft right now trading below profile support on its daily time frame, trading below its breakout level out there. There's an A to B equals CD pattern. Volume on its swing point was 15 million so far today. This has done 17 million. So you've got a confirmed A to B equals CD to the downside inside of Microsoft. Microsoft is trading below its weekly profile support at 400.58. That says you could target the 324 level. All right, so that's the bad news about Microsoft. Microsoft ain't going down to those lower levels unless we see it close below that monthly oscillator and change line, and that's in the 387 area. Just use 387 even Steven. If you close below that, then those other patterns are very likely to come into play out there. Let's take a look at the next request. Next request was to take a look at the SMHs. If we take a look at the SMHs out here, really what I'm going to do to take a look at the semiconductor indexes, I'm just going to go take a look at this chart out here. So we've had a bit of a rally inside the semis, but if you take a look at that rally, all that it did was rallied into that daily oscillator and change line at the 4603 level. That line is red. With that line being red, that is a bearish signal. So we've had a nice little rally, but price has got to close about 4604, let's call it, in order for that to suggest that it has more legs. Next request was to take a look at HYG. Where did I put that? HY, here we go. So we take a look at HYG out here, high yield bond fund. It's back inside its profile. So its next area, so it's got support at 75.71 and the resistance level, which it already cleared once before. So maybe this is trying to set up an A to B equals CD to the upside. If it's going to do that, you need to see price close above 76.24. And then finally, to copper out here. If we take a look at copper, let's go see what that is doing. If you give me a moment, we should be able to pull this off. And here are the high-grade copper multi-time frame charts. Monthly chart is simply bullish. The weekly chart is what you want to keep an eye on. And the reason why you want to keep an eye on it is last week this confirmed a TD9 count top. So if copper is in all-out bullish mode, it needs to close above the high of that candle. The high of that candle is 4.5135. That's the main contract. If price closes above that, then we're off to the races. There's also a TD9 count top that may form by tomorrow. Folks, stay tuned for all the great programming. I'll look forward to seeing you on Fantastic Friday. Have a great day.